Hey guys, this is Steven from the Happy Profits. Just thought I'd shoot like a reboot. Maybe sometimes you think you're not taking something serious and that you need to start looking at, am I still doing the trading plan I've heard about all the time? Well, here with Luke and Nate and Steven here at the Happy Profits. Basically, we're just trying to go, hey, this is the right place to learn how to place the right trade. And so we're going to go over a trading plan today. You've probably done some of this. It's probably going to be a little more specific, and maybe some of these little specifics are going to help you out. So we're going to go ahead and go through the specifics of a trading plan. I hope this helps, and then I'll give you my real life answers to some of these things of what I do personally to make my day a little bit easier when I kind of denied not doing it early on. So here we go. And then also, if you want a copy of this, you can DM me, which is direct message at FOMO NOMO. It's all capital letters, FOMO NOMO. Basically, I named myself FOMO NOMO, so I would stop. So part of that was manifesting, was just telling myself that's what I'm going to tell myself. So if you want to do that, go on Telegram. We also have a great chat room. We have some really good traders in there and just very positive attitude. And we call out stock all day long. And then we have a really good webinar that gets on in the morning. And we have a couple of very good essential traders that just get in there and tell you the levels to look at so you can start entering a stock and when to exit a stock with profit. And then some other techniques where you can scalp, and then we have Luke. He holds stock really long. He does very good. He looks at some other things and basically a lot of different techniques so you can find which one that suits better for you. So let's go ahead and go to the trading plan. Thanks for showing up and watching this. This is a step for you to get better in your world. So, a trading plan, what is a trading plan? Well, basically, you're going to eventually realize what is a trading plan. What am I not doing in my everyday life that needs to be going? So the first thing is I said, okay, well, I have to basically say, here's a step-by-step guide for me to do something solid every day. So the first one's going to be define your goals and objectives. And so the first thing is right here, long term or short term. Well, for me, it's short term. I do have some long-term investments. I do S&P 500. I got some in October 22 at about 3,800. It was a low at 35, and I think it's around 5,800 right now. So I'm doing pretty well with that. If it starts going under maybe like 53, I think it would be now in a bearish market. So I'm going to just stay tight for a little bit. But if it changes, I will not hold that. So currently, I just do short term. Short term for me is day trading. Some days I scalp, some days I go longer. I support anybody's tactics because eventually, at the end of the day, you have to be comfortable with your trading style. If you're very slow, you can do a long. I would advise you to get in pre-market as early as possible for that. And then if you're shorting, I would probably wait till about 10 o'clock a.m. or 11 o'clock for Central Time. Eastern time. So otherwise, have your financial goals, determine what your targets are. Some people are looking for a lot. If you're looking at a yearly return, you might want to, and you're doing day trading, you definitely want to see if, hey, there's 260 days that actually trade and stuff like that. And then what do you possibly want to lose every day? So risk tolerance is very important. Doesn't mean you make a tight stop loss and you lose every time because you're so scared of winning. You lose more because your stop loss is too tight. So we'll go over those in future videos. But basically say, hey, I'm trying to get a 10% annual return with very little exposure on the trade. So those are two big things that you're looking for, 10%. So let's say you took a dollar stock and you ran it up to a dollar 10 and you got out and you're going, hey, that's wonderful. That's 10%. Some people look at it as a dime. Well, if you did do one share, it was a dime. And then if it was 30 shares, it was more. And then if it was 100 shares and you got up a dime, well, now you have a $10 bill that you didn't have. And all you had to do is to do a simple click, a simple analysis, and just work on that analysis with some determination of what your risk is as well as your gains. So basically, right there, I do short term, I do a couple long terms. With obviously long terms are more solid companies. Short terms, you're going to have some announcements during the day. that are going to drive a stock up, and why not ride the wave that everybody else is riding because they're just making money, and why not you? So those are big things like that. So my biggest thing is to try to make, even 10%. Used to be 10 or 20%. Now I can do 2% and be happy because I trade with more size now. So I don't need as much as someone else would with a smaller account. So with a smaller account, basically what I would do is still keep working and start putting your money away. Put your money away while your education is building. If you can put your education first and your money making second, I think you'll be alive. And if you've done the other where you put the money first, basically gamble without the education, then you're probably just now scared to take stocks. So, because you've done the mistakes already, but here, happy profits, we have a lot of good trading tactics that work for you. So, take a private or just in our chat room, we have it. And if you want that, we can reach out and help you out. So we're going to choose a trading style. So my trading style is there's day trading. So we're basically buying and selling within the same day. Now, some of those, there's different day periods. There's basically pre-market, which before the market opens, and then there's a lot more volume when the actual market is open from 9:30 Eastern on. And then there's an after hours, and there's two little vignettes I didn't know about the pre-market and after hours, and sometimes the stocks move smoother. So if you like a little less hectic in your trading, those are good areas to learn how to take a trade and hopefully take profit. Swing trading is basically when you're holding position for a day or a week or more, many days, basically. And basically, you would be looking at a larger time frame on the day trading. Some people look at it 15 or 10 or 5 in a 1 minute. Sometimes a 15 seconds, the stock's going really crazy. Because I would want a little more zoomed in detail. But swing trading, you would maybe look at a 1 hour, a 30-minute chart, maybe even a 4 hour chart. And what that is the candles representing more time. So there's big patterns on bigger, like a daily chart, a 4 hour chart, and then a 1 hour chart. But all the patterns are eventually going to be the same. And I would focus on pattern recognition early on in your career. So we do that here. We're going to do one every week and break it down for you and how to find them. And we're just going to find them on live stock. So we're not just kind of showing you the drawing. I kind of don't like that when I see that on a thing. And then maybe show me a drawing from 3 years ago. We're going to show you today. And then we're going to show you live while we're in the webinar. We're going to draw the pattern as the pattern is forming up, and then you're going to see it, and you're like, "Wow, I saw it in real time for a change." And then just some key indication of why that stock has to form that, just from one or two simple moves that we've gotten very comfortable because we have some very good traders. Again, Luke and Nate and myself and Sean and Thomas Dentino. We have a lot of good traders in this room. Some people go off in little other chat rooms that kind of focus on each other, and that's great. But eventually, you want to find one place that people are just constantly trading all day, and that's a good thing. Don't have to trade all day, but if you're working, you have that little section of time. You can go in this room, and people are trading something. I'm usually trading, and if I'm not trading, sometimes I'm just taking a break. And because sometimes if you find out you take a little breaks, you're more excited maybe go back to work after a weekend, just things like that. So the next one's called position trading. That's a very long-term trade where you span weeks, months, or even years. So basically like that S&P 500. That's just something where you're taking a longer trade. Maybe you're adding positions every time it dips, and some people add at the top, some people add at the bottom, some people add at the middle. So whatever tactic you want that you can actually see that is a viable place to take and add to your position. So you just keep adding shares. So maybe when you first were young, you bought 10 stock of Amazon. We started with our children and we gave them $1,000, but they had to invest it in front of us on Christmas. This was a year ago, and then next year, they all were happy because they had $1,000 and now they have 1,600. Sadly, some of them outperformed me over the year by doing nothing. And sometimes that's where the position trading and basically buying better stocks, you do better. A little less stress. You just add it, and if and if it goes bad for a little bit, the company's pretty solid. It's not going anywhere. So those are the kind of ones you would want to look at position trading. And then we have scalping. Those are quick trades, last seconds or minutes. You go, that's crazy that a stock can do seconds. But we've seen stocks just this past week from 5 to 30, 3 to 59. That's a normal day here. And you don't need the whole move. That's the funny part. Somebody shows me 3 to 59. There was one just running Friday that ran up, and I just didn't get in. It was just so fast that I go, and then I said, "Hey, it's going to go in at 12:11," and then boom, it went so fast. I personally, and I'm fast, and I didn't get in the trade. And then I just said, "I'll wait till it stabilizes," and then it stabilized during the day and gave me nine perfect trades from 21 to 22.50. I think that was the range I took, and then two more breakouts later in that day that your option because you had a community of traders telling you what stock is hot because we're not going to trade a stock unless it's moving. And we're going to describe that like in time and sales in the future. But basically, just try to find your style that works with your personality and your time commitment. So we could definitely, if you take a private lesson or anything like that, we can identify that for you. Or we definitely have people in the room that said, "Hey, I was in the same situation, do that." Just get some free information there. Okay. So the next one we're going to basically go over is set risk management rules. So you can have this PDF again if you ask for it, and then we're just going to send it to you so you can answer your own questions because maybe you need to be going through this just as well as I'm doing it live for you. So your risk management. So how much capital are you willing to risk on a trade? Well, some people say you shouldn't do more than 2%. Well, if you have a $5,000 account, 2% is $100. And I would at first, I go, no, we're going 5,000 shares, but then you didn't have the education. So it's not a bad approach. But once you start seeing the patterns and stuff like that, you can start really increasing your money and your capital toward it. Otherwise, play it safe while your education is at a minimum. Just think of you at work when you're really good, you're probably sitting there going, I don't know anything, but now we got money and we have this new casino that's open a lot. You're gonna kind of get in there and shoot your wad, even if you're following other traders. But we definitely have traders you can follow. I tell you when I'm getting in, I'll draw you a blank chart, and then I'll chart it for where it's gonna go for my presumed expectations. And then after a while, you start seeing and you go, okay, I can trust that. And then you put a little bit more money. But paper trading is wonderful these days. It's basically playing Monopoly. Some people put 1 million in their account. Well, obviously, you're not going to put 1 million. So you're going to put 1,000 in one day, put 1,000 of that. And if you blow it 5 times, wonderful. I know that sounds weird for me to say wonderful when you lose, but after a while, if you lose with no money, you did it the right way. And then just slowly get in the market with one, 10, maybe 100 shares, maybe 1,000 shares eventually. And if you take that approach, you're not going to cry about it. But again, I guilty of it as well. 5,000 shares first day, 1,000 shares first day. And then I talked to some other traders like, ooh, they only doing that after 30 years. I need to pull back. But I did take education like that and I did take it serious. So I pulled back and start doing that. And now I'm flourishing and we want you to flourish as well. So risk ratio ward right here, risk reward ratio. Basically, if you're risking $1, you should be trying to make three. I would advise going just 1 to 1 first. Now, I know that's not smart because if you lose 50% of the time, you're breaking even. Breaking even is not bad at start because you're going to talk to a lot of traders that just lose money. They lose money because they are going 3 to 1. And if they're taking these momentum stocks, I would guarantee you, 1.5 to 1 or 1 to 1 is a very good ratio. So if you're risking $1,000 and you're going for $100, well, your loss should be $100. And then you go, well, I'm trying to make $200. Well, maybe your loss should be $100. So that would be a 2 to 1 ratio. And so that's how you would want to set up your ratio. So when you see a trade, maybe you've seen some YouTube videos or Facebook little shorts, you'll see green and red. So that green is what they plan on gaining. And the red here is their risk down here, what they would possibly lose. The other thing is, say, what's your mass loss per day? So let's say you lose $100. You stop trading. There's probably something you did wrong. You didn't know what you did wrong, and that's why you shouldn't be doing large money anyway. And that's why if you paper traded and lost $100, there is nothing that you lost because you lost 100. But you got to put a serious size, take it like a serious account. Some people don't take it serious. I paper traded just a little bit. My trick was I needed to see what I needed to see before I start putting in the money. And I'm still in that process. I gave myself 3 years. I learned it after about 6 months, but I put about 6 years in that 6 months. And with people in the room, we'll give advice all the time. I just say chart 10 charts a day. And what that means is you look at 10 charts, look what is going up and down, and then you go and do I actually see that on a live chart today now? So at least you got the beautiful thing is you have pictures of stock yesterday, maybe the same stock you traded today, and that you could learn how to trade it better just from looking at yesterday. So try to determine a loss every week and then hold those tight. That's usually the hardest part is the discipline. So discipline is basically, I saw this guy come to a conference once, and then his wife was there, and I think she held the keys to the computer. And at first, I thought it was funny. She was over there doing Alasama, very upset. But after a while, that is kind of the restraint you need because sometimes we just think it's a pipe dream. And then also you hear the word millionaire, and then you're trying to do it too quick. Well, if you ask any millionaire, they didn't get to be a millionaire in 2 days, and you're with your little $5,000 account's not going to do it. But tomorrow, you can make an easy $500 trade and be happy, and then you can just slow or a $50 trade. Just as if you tell me you made 5 cents, I'm happy because you didn't lose money. Then if you made $5, I'm happy for you. If I have a friend that makes 5 grand, I'm happy for him. Their risk tolerance is a little higher because obviously, if you're risking 2 to 1, well, maybe some days that's not good. But just taking smart approaches is what's going to help. All right, so we're going to go ahead and select markets and instruments. That's number 4. So what we usually do is we do stocks here. We like to do gainers. We find those on a couple different lists. You can find them on TradingView, Webull, what we prefer, because it's just the easier way to find stocks that other people are looking at. And if people are looking at stocks, they're probably going to keep looking at them the whole day because that's going to be the stock that's important. Usually you'll see the larger stocks like this at night, and then they wake up. They usually wake up with some taking profit first, and then they start deciding what direction they're going to go. But for other momentum stocks, they're going to go today, and usually whatever happens in pre-market kind of gives you a little bit of a precursor. And even if it goes down, you can make money going down or stock going up. And if it's up a lot in pre, it could go more or it could go down. Still ways to make money. The other instruments are basically identifying specific stocks or commodities that you would trade. Again, we like momentum stocks. And if you like larger stocks, you can trade them on the daily or you can swing trade them or obviously invest in them. All right. So the next one is basically here. We're going to keep it real simple. Develop entry and exit strategy. So I have a very specific one that I use. I do certain conditions, when to enter the trade, as technical indicators, moving averages, support and resistance. That'll all be shown to you here. We have traders that'll call out support and resistance. We'll say, hey, it's above the 20. And if that makes all that sense, take a private lesson and learn some basics. The reason why 90% people lose is they don't even have some basic skills. So definitely work on that, okay? And some other stuff like earnings reports. So if Apple had a good earnings report, typically in the after hours or whenever it was announced, you could expect a move, whether it's positive or negative. Sometimes it's weird. You get positive news and you just get a nothing. And sometimes it's negative news and you get something. And but at the end of the day, it's a watch list. And what we teach here a lot is just saying having a watch list. So if I have a friend take a trade and then he tells me what he took, I look at it. I don't jump in it, but I look at it and go, hey, there might be some more. Or, hey, it kind of looks bought out, so I'm going to wait. But if there's a lot of eyes on it, it will make some more moves. Even on the way down, a stock can be traded up probably 9 times. And we identify those spots every time. Exit criteria, basically setting rules for when to exit a trade is just as important. It's like basically taking profit, or if the stock goes against you because maybe you did some wrong planning or you bought at the top and you shouldn't be buying at resistance, you're going to try to buy at support and work your way up. If you're always buying at resistance, you're probably going to notice you're buying at the top and it's going down. So when to cut your losses, basically after a couple, zigzag down, you need to cut it because obviously you just realized you bought at resistance and you're selling at support when you should be selling at support. And then as it goes up, you start looking how to sell it into resistance. So, and we do use stop loss, take profit orders. Webull makes it very simple. So if you need Webull, be glad to give you a link. You get some stock, I get a little stock, and that's it. So it's really good. It's very user friendly. That's why I gravitated toward it. I do investments with Robinhood because they're very large and easy. But for 7 clicks, you don't even see the screen. Webull, even on your computer, you can see the screen or the chart because they're pretty active. You can still see it, but I'd still recommend more laptops so you can see a larger spread out. Actually, I'm on a 55-inch TV, even though I have a laptop right in front of me. All right, so we're going to outline your research analysis. That would be the next thing. So technical analysis, that's what I use. I use moving averages, whether it's above the 20 EMA, that's the simplest one. Don't trade the stock unless it's over the 200. And then if it gets even over the 50, means 50 candles back or 20 candles back or whatever time frame you're looking at. And if it's above 20, obviously it has above, above normal trading right now. So if it's above the higher the time frame, meaning it's running faster. Because less candles back, it's still vertical. And those are the time frames. So that's what you would be looking at. We'd be glad to show you that as well. RSI, MACD, and Bollinger Bands kind of say, hey, it looks a little overbought temporary. Hey, it's underbought, so people are going to start buying it because it's cheaper. So eventually, buy low, sell high, and some people have been buying high and selling low. So it's the opposite. So hopefully, we can get you back on track real quick. Fundamental analysis. What are the financial metrics? Well, some of these companies are not making money, so they're good for shorting. Sometimes they're not making money, but they have very good market news. So we'll trade them up for that day, and that's it. We'll trade it as long as it tells you it's still going up and we're good. And basically, or like Apple has good earnings or something like that. But for Apple, you're going to buy $183 stock and sell it at 186. That's $3 for a lot of investment. When there's other types of stocks where that, $183 can actually make you $30 instead of just $3 later today. So that's a lot better investment. So, or for us, because we like momentum stocks. All right. Prepare for trading psychology. Basically, there's discipline. You got to stick to a plan, avoid emotional making decisions. So I think the more you click some paper trading or maybe very low share trading, maybe like a one share, that was a good advice from a great trader, Bryce Tui. You eventually have to get it to where it's not emotional. Now it's money, it's going to be emotional, but it is what it is. And the more books you read it, and you can kind of keep a poker face and you go, hey, I've made 5 decisions to get in this stock. Then you've made your plan and you stuck to your plan, and then now it's really just click. It's not emotional. So that's kind of where you want to do it. When you make a mindset, accept that losses are part of a process. Well, when you go to work, it's not a great day every day. Some days you get an easy day, like, wow, there's no work at work. We're going to hang out with the coffee or the water, talk to people. But some days there's going to be some work. So that's part of that. And if you accept that there's going to be losses, you'll eventually get used to them, and then you'll start getting unemotional about it. That's very big. And also always focus on the long-term success. If I make $10 a day, well, you go, oh, that sucks. Well, that's $2,600 by the end of the year. And I can't tell you another process that can get you $2,600 on a hustle quicker than this. And then if you can start getting up to $100 a day, that'll get you, $26,000, and then so on in incremental up there. So that's what you're looking for, and that's it. And if it takes you 3 years, think of all the other years you have to live. So focus on that, and that could be an easier way to make money when you retire and or you're on vacation. You can still make a little money, and I like it just because it's a good little mindset to practice. All right, set a routine, basically pre-market routine. You analyze overnight developments, you do pre-market developments, and you make your watch list, basically finding some tickers that have some attention and see if they have continued attention for upward moves. And if they lose attention, maybe you can short with the loss of attention that they've kind of overpriced and they're up. So that's a good way to look at just pre-market preparation, post-market review. You should always analyze this. I took a little time to do this. I shoot videos to do it. Journal your trades, journal where you entered and exit the trades, and evaluate what worked or didn't. And then eventually on that part is where I want you to start saying, did I see up or down? And then you might go, dang, I was trading at the top instead of the bottom. And that's what we would really like you to change in your trading style. Okay. Buying at support, where it's basically like a trampoline. And instead of hitting the ceiling and think it's going to break every time and go up. Sometimes that ceiling is saying, hey, it's just too high price, but yes, you bought it. And we have some little technical analysis that will help you. All right, so maintain a trading journal. Basically track every trade, enter, exit, the reason for entering, how it worked out. The reason, if you do that, you'll start owning what you do and you'll have better outcomes. Even if they're all negative, you go, well, that's the way not to trade. That's the way not to work. That's the way not to make my wife happy. All these little things. So eventually you work out your system that's going to work out. Regular review. So basically adjust your plan based on what you learned from the tracking it or the trade journal. So that's why you would have want to write it down so you understand. Uh, the more you do not do this, I will tell you, you will not be happy. You should be happy to look at what you did. Most people don't want to know, hey, I have a mole here, but oh, I went over there and they just froze it and that was it. But nobody wanted to go find that out, so then you actually might let it get worse. So again, if you're taking, I always just say, dumb people make dumb money. Serious people make serious money. So just get a little more serious about your thing and start making that serious money. If you want that financial freedom, I personally want location freedom. And for me to have location freedom, I need financial freedom. So that's my why every day. All right, back test your plan. Use historical data to test your strategies and refine them on performance before using them with real money. This is where I think I step up a little bit more than someone else. I will fact check everyone. Not that I don't trust them, but I don't trust them with my money. So when someone calls out a stock and you enter it and it goes down and you might be cussing them out, well, you're cussing someone else that doesn't care about you. It's just a random person in a room sometimes. And then also the other thing is, do you know what he's doing? No, you just bought because he said it. And I'm all FOMO'd and I get excited. So the trick is I always go, thank you. I may take a trade in the future on that stock or ticker, four-letter word, letters, less letters. And then otherwise, I go, what did he trade? And then why did he trade? And why aren't I trading that way? Because maybe I'm finding out I'm getting the news late and the stock's going down when I should have bought it when it was gaining interest, not when it's already interested out. So basically, this structure should help you obviously stay disciplined with your trading and make better informed decisions and improving your chances of long-term success. So if you want a copy of this, just reach out to FOMO Nomo on Telegram, or you can actually email me. I'm probably not going to reply as quick. Bouis, Bouis, trader at gmail.com. And then you can always text me and I can text you this back. Hopefully, if you're in an Apple phone, they don't let us do to Android, but otherwise, Telegram's the best way. If you do need to call for some lessons or get some structure, 281-250-9448. But yeah, basically, this is the trading plan, and this is what you should be doing. And if not, if there was just one nugget you got out of it, it was worth watching it because sometimes there's just a couple foundational skills that you need to change for you to be successful. So I'm Steven from the Happy Profits. I want y'all to have a great day. I want y'all to have a nice rest of the weekend and enjoy your trading career. Thank you. Have a good one.